Good morning, traders. Welcome to the TMT Stock Market Strategy video for Friday, March 18th. Well, I got another continuation move higher, which is a good sign, and everybody seems to be really bullish. I think overly bullish for that matter. I'm going to talk about that in a moment, and I want you guys to really be careful out there, especially for those of you who are swing trading and longer term investing. I would not be looking to add any positions right now. I'd be looking for any type of pullback or a deep pullback to add to a position. We are coming into the good time of the year, which is the best two times, as you know, March and April. I had mentioned that a few weeks ago, back to back months. We also are approaching some very heavy resistance where a lot of longs were trapped for many months, as you can see right up in here, thinking that the market was going to go this way, and we indeed actually finished the opposite way and started moving lower. So you could see that movement here. I've been talking about that. We are overextended now. We are getting into some overbought readings on daily charts. The McClellan oscillator is at 61%. Not that quite overbought, but it is getting to be overbought. Stocks above the 50-day moving average are now at 90%. So when that happens, there's not much more movement. There's a lot of sluggish price action. Okay, and that's where the markets usually start to pause. Now, this week, as you know, today is quadruple witching expiration, so we do get that bullish week which we've had. Next week, however, is going to be really the time where the markets are going to have to prove themselves, and I mean that by because the week after, following post quadruple witching, we usually get a sell-off. We usually get some weakness into the markets, and rightfully so. We are approaching some heavy resistance. Okay, so not something that I would be in the mood for, looking to buy, but we are trend traders. We do follow the trend for the day, and the trend is indeed up, as you can see. But you could quite see that right now we're up, really sloppy gaps, a lot of gaps still in place here that we need to we're eventually going to need to fill, and we're coming into this heavy resistance here. So I'm really overly cautious going into next week, and we'll see what happens here. Can the market take out the highs in this overbought state? Sure, absolutely. We've done it before, but I think that with the Mario Draghi comments and last Thursday, and then Janet Yellen being very dovish, there's got you got to scratch your head and wonder, saying, well, wait a minute. I mean, we're going to have free money yet again, and we're going to push to the stratosphere again just because the Fed is dumping money and liquidity, and what's the overall picture is actually really bleak. The worldwide economy actually looks horrendous. When you could just see that on certain charts that they have, the Morgan Stanley Worldwide Index. There's another GLW, I believe it is. Global index, and it's just not doing too well. I mean, yeah, we're doing okay, but remember, we're all interconnected now. So just something that I want you guys to keep an eye on. So anyway, there's the spiders. You can see the IWM still extremely behind all of the other indexes. This is our secondary leader and is lagging, not even up to resistance. The 200 is below it. So when you still have our leaders lagging, you just got to be careful. And it's something. Look, I'm not saying that you can't go long, obviously, and you want to follow the trend, but the overall picture just got to be a little careful with. Nothing is really kind of lining up at the moment, so I do like the markets, right now, at least to kind of take out the highs. And if it takes out the highs here, then I think we have a little bit more upside. But remember, next week should be a different scenario as of this week. And again, the transportation sector coming into a big area of resistance. Yes, did it break out? Absolutely. FedEx helped that with some good earnings. So we did pop up on that. And you can see this big long-term trend line here. And this long-term trend line has been in place for last year and a half. So now we're approaching it after a big run-up. You gotta eventually think that the transports will probably start to roll over again. Now, I'm not saying we're going to go all the way down here, but if we can pick that local low, that higher low from the previous low, and then we start to revert back up again, that's a good sign, a very good sign. And that's what I'm really looking for coming into the spring months. Diamonds, not bad. It is a lagging index, but it is definitely doing well. We had this bearish rising wedge, broke out of the wedge, so this just is just going to be basically an uptrend channel here, guys. You can see, and now we're breaking back up into, again, resistance. So you gotta use caution. You could see here we're into this heavy band of supply back above here, and you can see this. We're right in here, so Look at the volume profiles. You can see that we're really, really, really heavy in here. So we had a decent run. I would suspect that the next move would probably be lower. How much lower, we don't know yet until that happens. All right. And lastly is the Qs. And look at the Qs. The Qs actually lagged, although we had a bull flag here, went sideways for 5 or 6 days, and then sure enough, another 2 days we went out. We broke out, but yesterday had an inside day from the previous day. So I still a lot of sluggish price action here, especially in the Qs too as well. So just guys, use a little caution. Today is quadruple witching, so I would suspect the first 2 hours, and then after that, it's going to be very, very light, if at all anything. A lot of the specialists and market makers are going to defend their book. When they sell out of the money calls and puts, they want the market to stay kind of status quo for where the week was. Okay, so just understand that you made some money, call it a day. Have a great day and enjoy the weekend. Take care.